Are mortgage rates going up? Are mortgage rates going down? What's going on in the mortgage market? Hi, I'm your mortgage guy, Dave Steinberg, and this is your Summit Minute. So here goes. Let's talk about two things today. We'll talk about rates and we'll talk about how the mortgage market works. Starting with rates. Rates are about the same as they were a week ago. That masks the fact that there was improvements in rates Monday, Tuesday, and Wednesday. And Thursday and Friday, the market did a little bit of a backstep. Why was there a backstep? Because what's called the producer price index, that's the index that measures inflation at the wholesale level, that came in hot, meaning the inflation was higher than anticipated. Market doesn't like surprises, doesn't like high inflation. There's a chance that the inflation at the producer level will trickle down to consumers. And so the market got nervous, and therefore the rates, even though they've been better on Monday, Tuesday, Wednesday, we're back to where we were last week. What do you do if you're buying a home? What I've been telling you all along. As soon as you go to contract, I suggest you strongly consider locking your loan now and then seeing what happens. Great. Okay, let's talk about different kinds of mortgages out there. So there are 5 general types. There are conforming loans, there are FHA loans, there are portfolio loans, there are jumbo loans, and there are non-QM loans. Conforming loans, number one, they're the loans that most people get. They account for the overwhelming percentage of the loans that people take in the United States, particularly on their primary residences. Conforming loans generally have better rates, lower costs. Second type is FHA. They're often considered the poor stepchild. They're less favored. But the trick is that for some people, and I'll get back to that, they're really a godsend. Number 3, portfolio loans. Certain banks lend to their portfolio. They decide that they want to invest some of the money in their account on mortgages, and they get to pick and choose what they want. And sometimes portfolio loans turn out to be a real benefit for you if you meet the right parameters. Jumbo loans, you're buying an expensive house, you're buying a $5 million house, you need a $3 million mortgage, a $5 million mortgage, a $10 million mortgage. Those are the jumbo loans. And finally, there's what's called non-QM loans. We'll deal with that more intensely later, but non-QM loans are great for people who are, let's say, buying an investment property. They're great for people who are self-employed, and they can take advantage of certain instances where instead of doing a tax return, lots of different uses for non-QM we'll deal with in greater detail. Let's go back to the 2 big categories. Conforming loans, as I said, generally speaking, are the best loans for most consumers. However, there are instances where an FHA loan is a better choice. So let me give you the general rules and then tell you a story. If your credit score is, let's say, under 620, you probably will be better with an FHA loan than a conforming loan. It's just going to turn out to be less expensive for you. If you are buying a 3 or 4 family house, great opportunity there because it offsets your home costs, but nevertheless, Fannie Mae, Freddie Mac price that up, and FHA doesn't differentiate, so sometimes that's a real advantage. If you're buying a primary residence, it's a 2 or 3 or a 4 family. Some other instances that really pan out. I had a call from a client earlier this week. Client is looking to buy a little bit of a more expensive home, and he would have needed what's called a high balance conforming loan. That means that it's more than $806,000. And in his case, he was putting down a small down payment, and the price of the conforming loan was just really high. We were looking at rates in the 7s, very high costs, and he was ready to despair when we decided to price it as an FHA loan. The FHA loan was about 1% lower in rate, some disadvantage, but it was 1% lower in rate. It was hundreds and hundreds of dollars less a month. And we were able to agree that this was something he could really do. So when we help you get a mortgage, we look at all your options. We look at conforming loans. We look at FHA. We look at your eligibility for VA loans. We look at portfolio loans. We look at jumbos if relevant. Sometimes you can do a jumbo even on a loan that a loan amount below $1 million, and sometimes there's some advantages there. And then we find the loan product that's best for you. If you have any questions, reach out. That's what I'm here for. I'm your mortgage guy, Dave Steinberg, and I'm here to help.